What is good, bros? My hair is an absolute mess right now, but I thought I would finally get to this video where I teach you guys the way that I've been trading lately. I just took a payout. I won today again. I've been on a crazy win streak. I've taken an account from $100 to $800, and my goal is $10,000, and I know that I'm going to be able to do it. This is, in my opinion, like, I've traded many strategies. Like, I have to be super transparent. I strategy hop like anybody does, and this by far is the greatest strategy that I've ever come up with myself. I know that I didn't coin any of this. It's been well known, but I honestly this is such a high win rate strategy because it follows everything logical in the market and not necessarily patterns. I think that there's a huge misconception with using patterns, especially for rally gaps, inverse rally gaps, CISD, whatever, rejection blocks, order blocks, whatever. At the end of the day, all those are patterns. They're not really order flow and structure. So I'm gonna show. I can show my trading strategy here, and I'm gonna prove that it works like extremely well and it's very efficient. It does take a lot of like time to learn it. You need to obviously understand all the basics, and I do plan on making videos about all the basic stuff and like how to recognize good price action, how to recognize bad price action, how to know when is a good trading day, what is a bad trading day, how to know where my objectives are, how to understand opening range moves, all these other things that are part of the strategy. But I think it's most important to actually explain the strategy itself beforehand, like so that you can actually apply all the following videos, the actual subjects to the strategy itself. Now, obviously, this isn't new to anyone. I would be very surprised unless you're very new to trading. This is not new to anyone, but I believe that I have not mastered, but I have definitely come very close to understanding the market structure to its full capabilities. And the best part about this is that it really does work in any time zone, and it works in Forex, it works in, crypto, and it works in the higher time frames too. So this is really good. The one thing I will say, this is a strategy that you need 100% to have patience with, because and that's something that I struggle with, and I'm getting better every single day because it is so much potential, but it is also going to bring you in some drawdown when, if you like high frequency trading with quick wins or quick losses, then this isn't for you. I think that this is going to minimize your losses, and when you do lose, you're going to learn a lot more from it than you just getting wicked out by, a tiny little move that you're trying to trade. So this whole trade is, so I guess I'll just go to the NASDAQ for now. I can show the S&P after. The whole trade relies on the following concepts of the market. So obviously markets go up and down, right? They go like this, whatever. They go sideways. The concept behind this trade is, okay, we have objectives every single day, whether that be, that could be a previous day high or, let me put this in white. So put this like a little bit like darker there. You have like previous day high or previous day low, then you got like high of day, and then you got like previous week low down here. And let's just say like, market opens over here. At the end of the day, the market is going to structure itself to one direction, whether that be a bounce or that be a continuation to the objective. That's essentially what we trade. So let's just say, okay, overnight Asia didn't really do much. London distributed a little bit, put on a different high, and then it formed a low of day, and then now it's just like consolidating, trading like this, whatever, right? So this is Asia, this is London. Not much going on. We have very clear objectives. We have the low of day, we have the high of day, and then we have, let's just say this was previous day high, and then previous day low, just for like the practice sakes of the strategy itself. Obviously the name of the strategy is M's and W's, because what do you see? You see M's and W's in the market. Now, what it all bases itself on is where the market wants to go and what objectives we want to fill. That could be hourly for value gaps. That could be, like I said, previous day highs, whatever. And this usually, of course, it happens during New York Open because it is, like, in my opinion, the best time to trade. But you can easily do this during London, Asia. It's just going to be a little bit slower, and you probably won't be able to catch as big a move. So basically, what you do is you wait for 9:30, and I like to wait for like at least 9:45, because those first 50 minutes really do determine with a lot more clarity where price wants to go. Therefore, waiting those first 50 minutes is going to first, reduce the volatility a little bit, meaning that price is going to be a little bit smoother and you're less likely to get wiped out. But if you do get wiped out, if you're trading properly and you get wiped out, that means you were just wrong. So that's not really a big deal. And it also usually between 9:30 and 9:45, structure isn't the best. There's a lot of movements like up and down, a lot of choppiness. This strategy really thrives after that period. But yeah, so let's just say right here is like the market open, right? Let's just like put it right here. This is the market open. And what happens is, okay, we open and we go up, kind of chop around, whatever. 9:45 hits, and then we see this. Boom. We take out all of this internal highs right here, and then we're seeing a move, and then we're making bullish structure right now. We're making bullish structure. We just put in a higher high. This strategy is great because it sets up for both sides. If we're going to be bullish and our objective is the previous day high and the high of day, then we're going to respect this entire bullish order flow. So I just wait for the second, I wait for the first higher low to get put in, and then for the second higher high to get put in, and I enter here. I enter just purely based on structure. My stop loss is usually either at the bottom of this or like maybe a little lower depending if there's a fair value gap or not. And then my final target will be here with a break even at the original place, a place that makes sense. So that's basically it for the strategy itself. So this would be a W. As you can see right here, you have, I guess I'll do it with a pen. As you can see right here, you have the W. Like right here, you have a down, up, down, up. There's your W. You enter on the top of the W. So that's basically like for the W's. And then let's just restart this market open, right? Let's plant a different scenario, which is also saves you from consolidation and poor price action. Let's just say, okay, we go like this, boom, boom. Let's say we go all the way up here. And then most people would be like, oh, let's long. We're definitely going to take out these highs. These are the objectives. I'm like, okay, perfect. If we can confirm that, then I'll take it. But if I see the following, we put in a lower high, we put in a higher low, then we put in a lower high, and then we put a lower low that disrespects some type of bullish order flow indication, like a fair value gap, or that'd be like, BPR. BPRs are usually the best. Then I'm thinking we don't actually want to go higher. Market wants to go lower. We just shifted structure completely. And in these cases, I like to put my stops a little bit higher just to protect my position, because there tends to be a lot of chop at the beginning. And you can target, whatever objective you believe is going to be hit next. That's essentially it. That right there is your M. That's where the M comes in. So let me show you guys the M. Where's the brush? So this is where, as you can see, M right here, and then you enter at the bottom of the M. It's truly as simple as that. It doesn't get any simpler than this. And obviously, I'm making it sound super obvious and super simple, but it's really not that simple. You do need a lot of market experience, and you need to recognize the way that price is moving and the way that we're behaving is really determining how we are gonna end up trading. So let's just go over now, basically, now that I've gone over the trade itself, let's go over a couple of examples. And just for the sake of the strategy itself, I'm gonna go over an hourly example, a 50-minute example, a 5-minute example, and then a 1-minute example, so you guys can see that it does work on basically every time frame. And at the very end, I don't trade Forex like at all. I don't trade Forex whatsoever, but I can guarantee you that it works for Forex too. So let's start with the 1 hour example, right? Let's just go back in the market, whatever. Let's just say, we can go select a random bar. All right, perfect. We're at a random bar right now. And I'm not even going to move from the hourly. What do I see immediately? Well, first, obviously, we're trading at all-time highs. And I recognize initially my conditions and my objectives. What do I see? I'm seeing a lot of chop right now. We see a strong move up, so we're bullish. The order flow right now is bullish. For me to be bearish and want to imagine that we fill all of these, all of this liquidity, and then this entire gap fill, I would need to see something of the sorts like this. I would need to see, some type of lower high to be put in right here, and then for a second lower low to be put in, because usually there's a move up before that. So let's wait and see what happens. Right now we're not really reacting off anything, but we see that, boom, okay, we put in a lower high right here. This is our lower high. Well, I guess in reality, you could just take the trade purely off of this. But let's just, for the sake of the argument, for the trade itself, let's not do that. So what do we see now? Market is trading more bearish, is leaning more towards down, probably filling this entire gap. Obviously, zooming out, the most ideal trade scenario would be entering all the way down here. But, since this is the hourly time frame, you kind of have to understand that price first is not going to move like crazy. As much as we are on a huge move up, like it's not going to move like crazy. But anyways, let's keep this candle going. So, okay, perfect. What do we see? Okay, this is awesome. We didn't close below this Peter Ray, so therefore we're not interested in that yet. But however, after this bullish move up, if we can see a bullish move down like we do, I guess not here. There's no confirmation yet. Well, it doesn't look like we have a confirmation yet. I would need to see, like I said, I would need to see us close. Okay, well, there's our confirmation. Obviously, this is kind of difficult to explain, but let's just, for the sake of the argument, this is your confirmation. Where's our stop loss? Perfect, right here. Look, why is it up here? This is a prominent higher low or lower high. We have hourly gaps right here to the left protecting the position. What do we target? Well, in this case, we would target all the way down here, and we could place a break even like after like a 1.1 R. Let's just do that. So here's a 1.1 R. Let's just mark it out. And you might be asking yourself, why am I taking this short? Like, do I really expect price to go down 3%? Well, not really. I don't really know what's going to happen now. But and yes, this isn't the most ideal entry. The ideal entry would be like right at this PRA, because then we can be break even by now. But that's fine. Let's just do this. It's fine. Let's see what happens. Okay, nothing, we're respecting the hourly. We're respecting the hourly. We don't really do much. And then boom. Okay, we're break even. Trade is risk-free. Fantastic. We're continuing to form bearish order flow. Our first take profit would have been hit already, which was like something around like along this range. And then let's see what happens. And then we keep going. Let's say we trail our stops to this prominent lower high. And we're still fine. Still chilling within the range. All right, boom. We get taken out there. Still a profitable trade. And we obviously, if we had entered higher up, this would be a super profitable trade. Now let's just see what happens, in the future. See if this trade would have hit out, or if this trade would have hit, or if we just, okay. So we would have gotten, stopped at our break even if we didn't take profit or trail the stops. That's fine. It shows that, the market structure shifted. And to show you guys, this is where your M is formed. We make a move down. Originally, it would have been this move up, but we make a move down, we make a move up, we make a move down, we make a move up, and then we make a move down. This first move down we can ignore, so we can just put that. Boom, beautiful M. We enter at the bottom, even if it's not the best entry. If I saw this on like the 1 minute time frame, I probably wouldn't enter. I'd probably enter a little sooner. It all depends on the closures, but also this is the hourly, so I do expect bigger moves to happen, especially if it's also at 9 a.m. And then perfect, boom, we break structure, price goes down, makes sense, perfect, wonderful. You understand the strategies. Literally as simple as that. So let's go now into 15-minute example. So okay, well let's exit here, go to the 15-minute. And yes, I do obviously, as anybody should, use use different confluences from higher time frames to allow me to enter on the 1 minute. I enter on the 1 minute confirmations, but it all has to align with the higher time frame goal. So I'm just trying to show an example, purely mechanically that this does work, even if just based on pure intuition. So for example, that huge hourly move that we made down, chances are I would have caught something in there within the 1 minute time frame. But let's just go into the 50-minute now, all right? We're clearly on like a pretty big downtrend, all right? I'm even gonna turn off this. I don't need this. I don't need this right now. So we have, let's just go for like smaller targets here. We have what would be a previous session high. So this is a Monday. This is on Monday, right? December 2025. Perfect, that's fine. We have this objective up here. Then what do we have? We have a clear imbalance down here. So we can have this as an objective too. Then this is an objective too. And then even this is an objective too right here. And for longs, we also have this objective up here and then this final objective up there. So perfect. We've marked out our objectives. Now, what do we want to see? We want to see price move. Yes, I am going on like different time frames. I'm going on different time zones on the higher time frame because I don't really care about the moves. Like it's gonna move anyway. But when it comes down to the 5 minute and 1 minute, I'm gonna go into like my favorite time zone, which is the New York Open. Let's see what happens, right? Okay, we move, we're not really doing anything, kind of just chopping around, nothing happens. Probably gonna have to wait until the next session open. That's perfectly fine. Okay, we're trading during London right now. Let's see if we find anything in London. Boom. Okay, we're seeing a little bit of a bullish move up. We took internal liquidity. What do I want to see? I want to see the following. I want to see us retrace into this point so that we can have that clear W formation pattern and then close above this, making another prominent high. And look at this. We have a 50-minute gap right here. If we can close above this and confirm it, then I would take it. So, okay, we don't make a fantastic move. This would be a very iffy W. Not the most clean W here. Obviously, the idea would be down here, but it's fine. If we want to be bullish and we're seeing a lot of strong bullish momentum, then we can leave it at that. This is a lower candle right here, and the reason I have both candles in the same color is to show that it doesn't really matter. You should be able to see it anyways. Like the color itself shouldn't really matter that much. So let's say now we enter on this trade. Okay, boom, we enter here. Where are my stops? Are my stops going to be right here? No, because this isn't even a prominent high or low. This is just like a wick. This is already a risky trade. I wouldn't be taking this, but let's just take it for the sake of the argument, like I said. I would probably put my stops like right here. Now, what would my objective be? Well, obviously all the way up here. My break even likely being this wick right here. So let's see what happens. Let's see if it plays out. Okay, we're in the money. We're in the money. We're chilling. We're chilling. Okay, boom. Perfect. We're break even. Our first target was hit. What happens next? Okay, we get stopped out. We get stopped out of break even on the second one. No big deal. Another winning trade. Super simple. Now, let's move into the 5-minute time frame. Okay, well, this is a perfect example right here. I literally couldn't ask for anything better. That's funny. This is a random candle, but this is, as you should have seen this from miles. We have a 1-minute failed BPR right here. We have what would be the most obvious M pattern of all time. Not pattern, but like structure of all time. We literally close below a PD array or for value gap, whatever you want to call it, and have a very obvious stop loss up here. Our break even would probably be like somewhere on here. So this would have been a break even trade, but let's just say that we don't have break evens on this trade. Let's see what happens. Okay, we're still fine. We're still fine. There's still bearish order flow. Nothing we could do now. Still fine. Like we're still chilling. Okay, let's just skip through this. And And okay, we would have gotten stopped out. That's perfectly fine. That's why, you know, my break even is very likely to have, I probably would have gotten break even on this. That's fine. We didn't even do any analysis on that, so obviously that wouldn't have been ideal. Now, okay, let's go into the 5-minute time frame now. And to put myself into an even bigger challenge to you guys trading Forex, let's just go to a random Forex pair. Sure, Euro USD, it's fine. Let's just go to Euro USD. And I'm going to do the 5-minute and the 1-minute on here. But obviously, I could have done it the other way around. It doesn't matter. I trade NASDAQ and ES because I like it. It moves really nicely. 9:30 a.m. is like the best time, but I can guarantee you that this works for this time too. All right, cool. Random bar. You saw me press the button. Let's mark out the conditions. What are my conditions? We're kind of in a consolidating range, as we can see. We're not really seeing clear objectives. Obviously, we have these lows, and then we have these lows, and then we have these highs, and then these highs. All right, let's just say those are our objectives. And then, okay, finally, we can put that high as a final objective too. What am I seeing immediately? You know, we have this internal liquidity. We have these 5-minute gaps right here that could easily bring us higher. If we want to be bullish, we have to respect this. We're respecting it right now. We're seeing bullish order flow, and as a matter of fact, we literally just formed an M formation right here. Like I haven't even done anything, but I can see it. What do we see? Push down, push up, push down. We make a higher high, strong prominent higher high, close above this fair value gap. Even though we're trading against this fair value gap, I'm seeing a complete structure shift. In this case, I would put it under the wick. My break even would likely be at the middle of this 5-minute gap with first and second objectives right there. Again, this isn't a 100% win rate strategy, but let's see if this one plays out. And boom, just like that, we're break even. Let's see if we can take first take profit. First take profit hit, second take profit hit. Easy win. I can't, like, you really can't make this up. Like, this is as simple as it gets. It's M's and W's, baby. Like, that's all it is. That's all it is. M's and W's. Like a monkey could learn this. It's literally as simple as that. Now, okay, let's go to the 1 minute. I can't even go to the 1 minute because like it's too far back. All right, 1 minute time frame, and we're gonna go to a random bar. Again, 1 minute time frame. I would normally not just look at the 1 minute time frame. I would also look at the 5-minute time frame, but I'm not gonna do that for the sake of this argument. Just to show the strategy itself that you can trade it in any time frame, whichever you're comfortable with. You can use it for swing trading. You can use it for day trading, scalp, whatever the fuck you want. I don't really care. Again, random ass Forex pair. I don't ever trade US dollar and euro. And, you know, okay, let's go to GBP, JPY then. Just to change it up a little bit. And let's go to a random 1 minute bar. All right, fantastic. What do we have? Obviously, for the 1 minute, I am going to have to skip to 9:30 a.m. Eastern time. Because, well, I guess not even for Forex. Like, it doesn't even matter, but I'll do it anyway, just because usually we do see a little bit more movement. So I'm gonna have to skip over to that. Like I said, the strategy, honestly, how did I come up with this? I didn't even come up with this. It's just experience. I kept seeing this myself. I kept getting stopped out when I shouldn't have gotten stopped out. I kept taking trades in the right direction and just putting my stop losses and take profits in places that didn't make any sense. That's why I was like, okay, wait, this actually makes a lot more sense now. And that's why I was able to realize that this works. All right. First things first, obviously I would normally, again, look at the higher time frame, but let's just not do that. We took out all of these lows, and we're seeing a little bit of a market structure shift to the upside now. We haven't even opened the market, and I can already tell you there's a good trade right here, which would have been break even by now because your break even would have been up here. We do have this low as an objective if we do want to be bearish, but it doesn't look like we do want to be bearish. And then our higher time frame objectives is all of this trend and liquidity. We have all of this, then we have this, then we have this. All of these, they all make sense, right? If we want to be bullish, we're going to be taking out all those highs. And then if we want to be bearish, we'll be taking out this, and then we'll be taking out this, and so on and so forth. So let's see what happens on the open. Just skip ahead. Okay, market opens. What is this? A Wednesday, randomized Wednesday. Now, what I want to see again, a solid opening range move. We're not okay. Boom. We see a pretty solid opening range move, bullish. Seems like we want to continue that trend. Now, I just want to wait and see for my good friend the M. Again, this would be a kind of a shit trade, but you could take this trade if you want. Something like this, like you could take that, but I wouldn't. So I'm not going to, and I'm just gonna wait. That's exactly why you don't take that trade. But now, look, now we've actually made a prominent higher low right here. And we formed bullish structure PD arrays right here. So if I get a closure above this, I'm long with stops right here. Actually, with stops like right at the bottom of this gap in case we want to wick out, because it's happened to me before. Our break even could be these equal highs, and then our take profit 1 could be up here, take profit 2 up here. Let's just say that. So let's see. Do we disrespect the bullish? Do we disrespect the bearish? Let's see. Perfect. Look at that entry. Beautiful. We're entering there. Let's enter 1,000 fucking contracts. Why not? We're either going to lose $1 million or make a shit ton of money. Oh, okay. $166. Whatever. I'm not even gonna, bro. Let's just, whatever. It doesn't really matter. Our TP would be, let's just put the final TP up there. It's fine. So why am I taking this trade? Because we're seeing an opening range move that is bullish. We're seeing that the bullish structure is continuing to be respected with these 1 minute gaps being respected. And then this bearish BPR being disrespected, the BPR being from this gap right here. And then what do we, and then we see obviously the good old friend, the good old classic W, as we can see right here. Literally picture perfect W. Like, couldn't ask for anything better. I would be very confident in this trade. This would be a trade that I would take 100%. So let's see how it plays out. Boom, we're already break even. Risk-free trade. You can go and fuck off and do something else. But I'm actually, like, I'd be break even by now just because we have so many prominent like highs. I think that this would be, well, you know, that's unfortunate. I think that maybe we're a little preemptive on the break even. It's fine. The structure kind of formed, and this should have shown you that, you know, we're going straight to take profit. I mean, look at the move we could have caught right there. That's literally just all based on pure market structure. If you understand the way that market moves and the way that we want to just go towards objectives, it's so easy. At this point, it's so easy. It's like way too easy. That's all you need to know. I don't like. It's so frustrating to see how difficult you guys make it for yourselves, thinking that you need to show A+ setup, this A+ fair value gap, inverse or block bullshit, this and that. Like, oh my god, bro, just trade where the market wants to go. Put a stop loss where if you predict that it goes that way and it doesn't, then you're actually wrong. Because the best part about this strategy is when you're wrong, you're going to be completely wrong. You're not going to be partly wrong. I guarantee you that with this strategy, if you take a good trade and you put your stop loss at a reasonable place and you do what you believe is right, you're not going to be partly wrong where you get taken out and then price goes to your target. Yeah, sure, that can happen once in a million years. You're going to go, you know, the price is going to go directly in the opposite position of your position. It's like, okay, I just read the market wrong today. Let me learn from this experience and let me get better every single day. One last example is the all-in-one analysis, where I just take everything all together and put it into practice. So let's go into crypto. Sure, let's go into Bitcoin right here. Okay, well, I can't even do this, so let's go into Bitcoin futures, or Bitcoin futures. Here we go, Bitcoin futures. Oh, great, you can't even fucking see any of this. Okay, wait, I need to see BTC, USD, probably from Coinbase. Yeah, here we go. Okay. All right. We're going to put it all into practice together on crypto so you can see that it works everywhere. Random 1 minute candle. I do 1 minute because then, you know, I have to see everything. Let's skip into our preferred time frame. Let's skip into 9. Let's go. Okay, so let's just mark it out. So this is a Friday. Not ideal. Let's just click another random one. I don't want to do this again. What is this? Another Friday, seriously? Okay. Again, another random one. Okay, perfect. Tuesday, and this is like close to the open. This is perfect. Okay. So let's go to 9:30 Eastern time right here. Let's just skip ahead until we get there. Holy mother of God, what in God's green earth? Okay. Well, that's a move. That is a move for sure. I'm not sure what was happening that day, but anyways, I actually just realized. Okay, so hold on. I need to do this just so we don't spoil the hourly. So let's go into the hourly and take a look at what the conditions are, what we have. Perfect. Okay. So we're clearly on a downtrend. Let's zoom back even more. What are bearish objectives if we think that we're going to go lower? I don't believe that there's any reason to believe. There's no reason to believe that we're going to go lower than that. For final objective, we have an hourly gap, which is going to give us a very clear set of objectives, that being, you know, the fill of both the top and the bottom and the middle. We obviously have these highs as well. And this also allows us to understand the movements of which we want to make, because we could easily just do the following. You could easily just push up into here and then start forming bearish order flow, because we wanted to fill the orders within the gap. Now, let's go into the 5 minute. What do we see in the 5 minute? Nothing new. Perfect. Now we can skip to the open. So let's go into the 1 minute here so we don't mess this up. Boom. The open starts. Let's wait for a clear direction of price. Nothing, nothing, nothing. A whole bunch of nothing. I don't see anything. There's no reason to trade any of this. Okay, blah, 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 blah. There's absolutely nothing going on. All right, we're seeing a little bit of a bullish move here. We did take out this low and then this low as well. Let's see if we see another strong, you know, okay, perfect. We're setting up right now for honestly like a pretty good trade. If we want to be bullish, again, if we're setting up for the classic BPR invalidation, you know, this is a 1 minute BPR. If we can get a failure of this and we can put like a prominent higher high in, like right here, we can take this to the hourly gap fill with our break even being this like wick high right here. So let's see what happens. Okay, boom. We do disrespect the 1 minute BPR, but I want to see us close above this 1 minute gap. We're not seeing the closure yet. Boom, there's our closure. We're entering. Let's just enter 1,000 Bitcoin. So we're entering on 1,000 Bitcoins. Oh yeah, big monies. Stops. Honestly, this internal low is fine. You could put it like down here, and it's perfectly fine too. Just because chances are we do have a 5 minute gap. Take profit 1 would be at this hourly gap fill. Take profit 2 would be at the middle of the hourly gap. Let's see if we can make $1 million on this position. And our break even would be here. Now again, theory is the following. We took out liquidity. We're seeing bullish order flow. Could we have entered around these parts? Yeah, probably. We could have probably entered something on here, but we didn't, because there's, you know, I kind of recognize the price wasn't moving that well. This is much cleaner, a much cleaner move right here, a much cleaner retrace. This is not a great closure up here because it gives you such a shit entry, and we don't have this stack of bearish confluences. So let's see how our trade does. Again, could easily lose on this. Okay, we're kind of not great. We're chilling, back to the profit, back to the negative. Okay, we get stopped out, not a big deal. Can't win them all. That's perfectly fine. So let's go ahead and skip. Again, this works best on NASDAQ and the S&P because they do move better than crypto. So I'm gonna go to another random 1 minute bar to see if we can do better than this. So I don't want a Friday because I want to skip ahead. All right, Thursday. Thursday's fine. What time is it? Thursday at 3. Okay. And then we'll do one. This will be like the last example, and I'm actually probably just gonna kind of let this play out from here because crypto is 24/7. So let's see our objectives. We are clearly within bullish like direction. So here, also the trade from before, I didn't mention that if we have such a drastic move at 8:30, you know, like up and down like that, probably shouldn't be trading that because that's most likely where all the volume went. All right, we have these two objectives for the bullish continuation. On the hourly, we have this bearish objective. Oh, I just realized. Yeah, we have this bearish objective right there, and then obviously we don't have any strong PD arrays. Therefore, I don't see the move. I'm going to mark out this wick low just in case we are super bearish, but I believe that that is good. I'll mark out these highs as well for like a pretty decent break even, and I'll put this actually at the hourly for value gap fill. So now let's go to the 1 minute. Let's go to the 5 minute actually. What do we see? We're seeing clear bullish order flow. Let's see if we can get some type of move. Okay, we're seeing a super bearish move. Wow, lucky us. We caught a really good bearish move. Let's go down to the 1 minute time frame. Now, if we're gonna be bearish, then we have to see a retrace and then a continuation lower with disrespect of bullish order flow. If we're gonna be bullish, we should be seeing pretty clean price movements up into here. What do we see? Okay, we're seeing bearish moves right now. This is one of those trades that you need to recognize that, okay, our objective is clearly lower, so why wait for a bigger retrace? Let's just capitalize off of this. This is a good closure. Put our stops up here, and then we can put our targets, you know, take profit 1 there, take profit 2 down here. With our break even, let's just put it at this like wick 1 minute. Now again, this isn't the most ideal trade, but if we truly want to be bearish, we should just see continuations lower. We could have been preemptive, which it looks like we were. That's perfectly fine. So we just wait and then see if we make another prominent lower low or if we make another higher high. We're not really seeing much right now, so I don't know. I wouldn't be taking any of this. Again, I don't trade crypto, so this could just be like a complete fluke right now. All right, we're seeing maybe a little bit of a bearish push right here. This is a good point to believe that we do want to continue higher. So what do we see? Okay, boom, we're seeing lower lows get put in. Lower lows get put in. Lower lows get put in. Nothing much else to say. Again, okay. Fucking sick and tired of all the skipping. This is like super low probability. Like this sucks, bro. I don't know how people trade crypto. All right, well, we make some type of M movement right here. You can see. Therefore, I will take a short right here. With my stops, I got this. I probably like at this gap right here and take profits. Same thing. So let's see what happens. And break even not hit yet. Has not hit yet. Okay, there. Break even hits, and we have taken both of our profits. Boom, just like that. All right. So that's basically it. I literally can't give you any more examples, and it just goes to show that this strategy makes sense. If you take, for example, right here on crypto. If you take some dumbass trade, like from up here, right here, this 1 minute inverse value gap, you're going to get stopped out because that's like, you're trying to predict the impossible to predict. You want to follow what the market tells you. Like it's truly that simple. So again, NQ is so much better for this because like, look at this 1 minute time frame. It's like completely different. And you can see that it's completely different too. Go to a random fucking bar. I can tell you in 2 seconds. All right, boom. We have news. I'm not interested. So let's go all the way back here. What do we see right here? Perfect. We're seeing bearish confluences get maintained. 1 minute failed BPR, the favorite right here. Enter. Take break even here. Take profit 1 at, I don't know, like this low right here. Take profit 2 at this low right here. What happens? Take profit 1 gets hit, take profit break even, take profit 2 gets hit, you win the trade. It's as simple as that. It doesn't take a genius. Just look at what the market is trying to tell you and just follow it. All right? It's basically it for the strategy video. I don't plan on doing this ever again, so you better watch this video to the very end because I've just given out so much free sauce that and it's like, bro, it's come on now. Like I've been winning with this so much that it just feels wrong not to share. I'll leave it at that. Again, obviously, tune in to my trades. Follow me on Twitter. That's where I post like all the analysis after too, and on my YouTube, TikTok. Like I'm doing the challenge stuff too, and I think I should be able to pass $1,000 next week, which is pretty incredible. So yeah. I hope you guys can learn something from this. Take this into action to actually do something with this. Obviously, my life isn't as good as it can be, but I've just now discovered how good it can be and how good it can get. Therefore, I'm trying to share this with you guys. I'm trying to share some love. I'm trying to be a good teacher here. If you want to learn more from me specifically, you can join the Discord down below. There's a link. And if you guys don't like that Discord, like leave a comment and I can make a new one where it's just me and not just me and my friend. So yeah, that's basically it. I'll catch you guys in the next one. Peace out.